Good morning. Good morning. Shall we start? If you can hear me, just type OK. Okay, so you can hear me. Now good morning, yeah. Now let's look at what we have discussed so far. First, we talked about financial intermediaries and what are the types of financial intermediaries and under different names, how they are addressed. Then we looked at different products offered by financial intermediaries. Then we started to look into the first product, venture capital. Last week, we talked about venture capital, and I hope you have an understanding about that product. Initially, I'll give you a few questions just to brush up your memory. Number one, note down. Can a specialized leasing company accept deposits? Can a specialized leasing company accept deposits? Your answer is yes or no. Yeah, what is your answer? Someone chat me. Can a specialized leasing company accept deposits? Others got two answers. Can a specialized leasing company, SLC, accept deposits? Okay. Now, can you look into the first notes I have given you, the first slides I have given you, the structure of financial intermediaries in Sri Lanka? Yeah. And under that, we discussed institutions that can accept deposits and governed by Central Bank of Sri Lanka. Then we looked into institutions that are not governed by, that are governed by Sri Lanka, Central Bank of Sri Lanka, but cannot accept deposits. Specialized leasing companies, under which caption can you find them? Specialized leasing companies, under which caption can you find other institutions? Very good. Other institutions means what? They are not institutions allowed to accept deposits. So what is your answer? Now you have to chat me again. What is your answer? Can specialized leasing companies accept deposits? Cannot accept deposits. Yes. Specialized leasing companies cannot accept deposits. That was the first question I gave you. And that is a question often repeated. So question number 2, just to remind what we have done so far. Question number 2, what are the alternative funding sources of specialized leasing companies? What are the alternative funding sources of specialized leasing companies? Okay, check me some answers. If you cannot accept deposits, then there must be other alternative funding methods. What are they? So your first answer was no, specialized leasing companies cannot accept deposits. So the second one is, if so, what are the alternative methods? Send me your answer quickly. Write me a few other sources of funds. Yes. What are the other alternative sources of funding? Very good. Bank borrowings, owner's money, commercial papers, promissory notes. Right. Good. So that's what we did for the very first day. And second day, we talked about venture capital. So my question here, what are the funding sources of venture capital firms? What are the funding sources of venture capital? Check me your answers. Last week we discussed. What are the alternative funding sources of venture capital? Angel investors. Okay, so that is one source. Right, so the most common source is, yes, pension funds. Very good. What else? Tell me one more source of venture capital. Finance firms. Very good. Okay. Right. And today we are going to talk about insurance. The main heading, insurance companies. That's right. So that is another funding source of venture capital. So we are going to talk about insurance today. So your main topic today is insurance. Note down, insurance. Now, before talking about insurance, I prefer to talk about credit evaluation. Credit evaluation, we use the acronym CAMPARI. Here, the last item, I, represents insurance. Now, what is insurance? What is insurance? Can someone just type me whatever comes to your mind when you hear the term insurance? You have seen many advertisements of insurance companies and they always talk about some nice keywords. What comes to your mind when you talk about insurance? Yeah. The term protection. Insurance. The moment you hear the term insurance, you remind protection. Someone protect me. Against what? Against the risks that I have to encounter. So insurance will undertake the risks and protect you. Okay. Just write me yes or no. Now, are you having a life insurance policy? Just type me yes or no. Yes, you're having a life insurance policy. Yes, no, yes, yes, no, no, Yes, right. So in insurance, we use the term insurance penetration. Out of the population, how many of have purchased an insurance policy, life insurance, I'm referring. So the insurance penetration policy is very low in Sri Lanka. The insurance penetration. It's, if you take a sample of Sri Lankans, very few people have insurance policies, less than 5%. Now, why do you think people don't get insurance policies in Sri Lanka? Now, if I ask you why Sri Lankans do not insure themselves, what is your answer? Think and tell me some answers. Why do Sri Lankans prefer not to take life insurance policies? Majority prefer not to have a life insurance policy. Why? Yes. Can someone type me a reason why don't you have an insurance policy? Life insurance policy. Now, one reason can be shown with the current pandemic situation. I saw in one article, a nurse in US says the saddest word she heard is from a corona patient, and he's suffering a lot, and he has to be put into the ventilator machine. Before putting into the ventilator machine, he asked, now who is going to pay for this? And even before putting it into the ventilator machine, he died. Means what? In so-called developed countries, people are worried about their welfare measures. But in Sri Lanka, health insurance is free. And our social fabrication is so connected that we look after one another. So there can be quite valid reasons for many Sri Lankans to not to have a life insurance policy. Many Sri Lankans who are working in other countries prefer to come back to Sri Lanka during this pandemic situation, because most of the things you get free. Quarantine, you get free. In other countries, either there is no such facility or you have to pay for it. So these are the reasons why you don't want to have a insurance policy in Sri Lanka. You get most of the things taken for granted. Your family and the welfare measures taken by the government. Okay, we'll get back to our subject area. I was talking about CAMPARI, an acronym looking into credit evaluation. One of the most difficult things whenever we give a loan is to evaluate the ability to pay back. So the credit evaluation process can be summarized by one acronym, CAMPARI. The first thing we are looking at is character, ability, the profit margin we have to take, the purpose of taking the loan, the amount that I have to give to him, repayment, how does he pay back? If he fails to pay back, how can I recover? That is known as insurance here. Now it is widely used as a health check for businesses when approaching a bank for lending. So CAMPARI is an acronym used for credit evaluation. We'll move further. Credit analysis tools, CAMPARI. The first one is character. Character means integrity of a person, history and background. Now, before giving a loan to a person, I have to evaluate the character of the individual who is going to obtain the loan. How can I evaluate the character? Now, you who is having very good friends all of a sudden break up and blame one another and say, I never thought he will breach my trust. Now, if so, how can we at banks evaluate an unknown person? When you find it very difficult to evaluate the very known person, here we are given the task to evaluate an unknown person. And we are looking at the integrity of that person, history and background. We can use credit payback history. That's why we ask for CRIP reports. When this person obtained a loan, is he willingly get out of paying back? Is he a willingly defaulter? Or is he a very good paymaster? That's coming under character, integrity, history and background. For history and background, we may use CRIP reports. Capital, how much the person who is going to take the loan is already utilizing out of his own money. Capability, the managerial and technical competencies. Once I give him money, once I hand over his required loan, can he manage his business? If someone wants to take a school van for a leasing facility, can he manage that business? Is he the driver, or can he manage someone else as a driver? The purpose or the reason for which the facility is required. Whenever we give a loan, we ask, why do you want this loan? I have seen in certain personal loan advertisements, they say, we don't ask why. Means what? We don't worry about the purpose. So that happens only in personal loans. In all the other loans, we ask the purpose. What is the purpose of obtaining this loan? And that is a decisive factor. Purpose. Why do you want this loan? Amount. Adequacy of loan amount required. How much money you need. Now, if you want to get a school van, and if the van is valued at 5 million, that is the amount. But you have to invest a little bit from your own. That is what we call capital. Okay. And if you put 2 million, that's your capital. Balance 3 million is the amount. So that is decided by the valuation of the vehicle. If you are going to take a facility for the construction of a house, that property is valued. So the amount is decided like that. Repayment. Repayment, the sources from which the loan will be repaid and the repayment period. Okay, are you going to earn something out of what I give as the school van and pay back? What will happen if you cannot run this vehicle for 1 or 2 months? What are the other alternative methods? So I'm looking at your repayment. Terms and conditions. That's mentioned in our agreements. Security, that's what we called earlier insurance. Collateral, security provided. If everything fails, can I get hold of something? That's the insurance. Here I'm evaluating under Campari. So you have Campari and the other CCC parts. So these are different credit evaluation tools. Basically, in insurance, we look at a method of being secured. And there's another way of looking at credit evaluation is 5 C's. Under 5 C's, the same, something similar, character, also known as credit history. So character is also known as credit history. Means what? We don't believe that a person who has breached trust of another institute will honor the trust with us. That's why we are looking at the history. Someone who breaches trust with another person will have a very high probability of breaching the trust with me. So I'm worried about history of a person. That's coming under character. Conditions, like interest rate, principal amount that we discuss. Capacity, assess borrower's debt to income ratio. We don't want to give loans for the person who is already taken too much loan, who has already taken too much loans. So we are looking at the capacity of a person, and if he has the capacity to service more, then we will provide him the loan. Capital, indicates the borrower's level of seriousness. There are many loan takers who would ask, can I get 100% leasing facility? Can I get 100% loan facility? Means what? I'm not ready to commit even a little bit from my end, but I need all the commitment from the bank, from the financial intermediary. This is why we ask, okay, you have to put 10%, 20% out of the required amount to do the business. If the school van is valued at 5 million, you have to invest 2 million, balance 3 million, I'll put. So if you put 2 million, that shows your level of seriousness. Later on, we'll discuss a little bit with examples when we talk about insurance here. Collateral offers the assurance. Now in insurance, you have seen assurance is also equally used. You have H&B assurance, an insurance company. Assurance that if the borrower defaults, the lender can repossess the collateral. Even if the borrower fails, still I have something to rely upon. So that is the assurance. Okay, so that's on credit evaluation. So you will identify the most difficult thing in lending is evaluating character. Okay, now check me a financial product where the character is not evaluated when loans are granted. Now, whenever you evaluate a loan facility, you first evaluate the character. When we talked about venture capital, we said the quality of management matters. So whenever a young person wants a loan from an angel investor, the angel investor first look at the ability, the capacity, the reliability of the person who is asking the facility. So character matters even in venture capital. Tell me a product, a financial product where character is not measured. Think and send me your answer. There is a financial product where the loan taker's character is not evaluated. If you go for a leasing facility, yes. If you go for housing loan, still they want to check you. Tell me a loan product where you are not measured. The material is measured, but not you. What is that financial product? Very good. Gold financing or pawning. Very good. In gold financing, we measure only the articles, not the person who carries the article. Other than that, in all other products, it is compulsory or it's very important to evaluate the character. Okay, so you have some kind of understanding on credit evaluation. That understanding will be very useful when we talk about other financial products. The last one here in this acronym CAMPARI, I stand for insurance. And now we are moving for our today's lesson, insurance. Insurance, a large number of homogeneous units. Means what? When I take an insurance policy, the customer, I am not the only customer. There are many customers who obtain insurance policies. Loss is accidental. Means what? The probability of having a loss is less. Large losses are claimed, but small losses are not claimed. So that is another understanding. We have seen when side mirrors are broken in buses, they don't go for insurance claim. Small losses are not claimed by the customer. Affordable premiums. Now premiums are affordable. If you value your house 25 million, maybe the housing insurance you have to pay only 12,000 rupees per annum. So it's very affordable. Premiums are affordable. You can easily pay the premiums. Limited risk of catastrophically large losses. There are very few occasions where massive losses take place in insurance. Okay, now tell me some examples of Sri Lanka where you can show catastrophical disasters. Means what? Massive insurance claims taking place because of one incident. Tell me some such incidents. Very rarely you will hear a building get burned down by fire. But there can be occasions, entire street is burned down by fire. Very rarely you will see a vehicle is burned. Yeah, flood is one such. Yes. Tell me some more examples. Flood is one such. Okay. So flood is a natural disaster. Tell me some other natural disasters we have faced as Sri Lankans. Tsunami. Yes. Tsunami, we experienced a massive level disaster. Right. Most of the time in insurance, we see limited risk, 1 or 2 accidental cases. But during tsunami, a large number of vehicles got damaged. So that's a catastrophically large loss. In insurance, we believe such incidents are very rare. That's why insurers undertake insuring the risk of others. Now, this is what insurance mechanism is. Insurance operation is to collect more premium and invest income than payouts in losses and underwriting expenses. Okay, so the insurance business is collecting more premiums than paying out. That's the profit. Insurance income is made up of 2 components. Now, everyone who is doing a business need revenue. For insurance business, revenue takes place in 2 methods. Number 1, insurance premiums. Whenever you get an insurance policy, you have to pay. Most of the time, you may pay monthly in life insurance. So that monthly payment is the premium. So this is the first source of income. Once accumulating these premiums, the insurance company can invest them. When you invest, you get income. That is the second income source of insurance companies. So insurance companies can invest in different investment instruments. Last time we talked about venture capital and said insurance companies can be funding venture capital. Yes, they have large amount of capital with them, large amount of excess money, so they can invest in long term. And they can invest in other shares. They can invest in treasury bills. So they invest in different instruments. Out of that, they make money. For the insurance company, you have 2 sources of income. One is premiums. The other is investment earnings. Okay, just read this. Life, general. Okay, so in past papers regarding insurance, one very popular question is, what are the 2 types of insurance? Okay, send me your answers. What are the 2 types of insurance? Life and general. Yes, life and general. Now, as per IBSL, an insurance company can only engage in one of these sectors, either in life or in general. Earlier, under one name, they could do both. For an example, Janashakti Insurance PLC was handling life insurance as well as general insurance. And after 2017, you can involve in only one segment. So Janashakti Insurance Limited get into general insurance. Janashakti Insurance PLC was handling life insurance under same name, but there are two different companies, two different registered companies. Okay, my second question is health insurance. Is it a life insurance or the general insurance? My question is health insurance. Is it life or general? Yes, I got one answer. Yeah. Health, medical, surgical. What is that? Life or general? Health, medical and surgical insurance. Is it life or general? Okay, I get one-sided answers. We'll look into that after some time. So for the time being, you all argue that health insurance falls into life category. Okay, what is general? Other than life, non-life. Other than life, everything is general. Okay, so this is another question. What are the factors affecting life insurance? Now, whenever you are going to obtain a life insurance policy, your broker will ask a lot of questions from you. Your application will ask a lot of things to fill. And these are some of the areas tested. Age, health, condition, the current condition, health history, your past health, weight, occupation, gender. Okay, whenever you are going to obtain a life insurance policy, your insurer will be interested in knowing you. For that, he'll ask a lot of questions. Now, if you obtain a life insurance policy, they are interested in evaluating how long you are going to live. Okay, that depends on a lot of factors. Tell me, what are the factors that will affect life insurance? Tell me, what are the factors that will be tested before evaluating the life insurance premium offered to you? Send me some of these factors. Medical conditions, okay. What else? Is gender material? Gender. Age, health, occupation, yes. Now my question is family health history, very good. Right. Age, health, okay, right. Now you talked about age and health, weight, occupation. Now my question is gender, G-E-N-D-E-R, gender material when evaluating life insurance? Yes, why? Okay, who will live more? Gender is material, correct. Okay, who will live more, male or female? As per statistics, who will live more, male or female? Female, okay, right. So that's another important factor when we are evaluating life insurance policy. Is your hobby material? Your lifestyle or your hobby, is it material? Okay. What are the risky hobbies? What are the hobbies that can be categorized as risky? Now you say hobbies are material. What are the hobbies which can be considered as hiking, skydiving? Very good. What else? Traveling, okay. What else? playing martial arts, racing cars, smoking. Okay, so if your habit is smoking, that is considered as dangerous. Okay, so you know the answer for this. What are the factors that affect life insurance? Now we are moving into general insurance. We'll get one by one. So in past papers, these are very popular questions. What are the two types of insurance? Now you know that there are two types, life and general. Then I asked what are the factors that will affect life insurance? Then you told me the factors. So that includes your gender, your age, your medical history, your medical condition, your hobbies, your weight. Now we are moving into the other side, that is general insurance. General insurance products. There are many general insurance products. So even in past questions, they have asked, describe 3, 5, 6, 7 general insurance products. Means what? You should know some general insurance products. In Sri Lanka, this is one of the most popular product, motor. Okay. Now, why do you think motor insurance is the mostly used insurance policy under general insurance? What is the reason? Yes, it's for accidents. But why, let's say, in other things, there can be accidents. Fire can break out. Flood can be there. Tsunami will hit. Very good. It's mandatory by the government. Yes. You can't put a vehicle on the roads without insurance cover. It's mandatory. No other alternative. Therefore, it has become the mostly used general insurance product. So you can take comprehensive motor insurance policy that covers third party as well as own losses. So you have an understanding of motor insurance. Regarding motor insurance, earlier there was no on-the-spot payments, and it started by selling co, and very soon everyone followed that. It became very fast to get claims. Earlier, you had to go to the garage, get all the reports, and go to police and get everything done. But here, with on-the-spot type, call and go. Likewise, there were different brand names came. Motor insurance became very easy product to handle. Fire insurance is property insurance that covers damage and losses caused by fire. The purchase of fire insurance in addition to homeowners or property insurance helps to cover the cost of replacement, repair, or reconstruction of property above the limit set by the property insurance policy. Now we will talk about some nice examples. We started talking about credit evaluation, and we moved into insurance. The last I Campari referred to insurance. Now I'm going to talk about a case. We'll discuss after that. We'll look into some areas with this. There was a businesswoman, and she was handling a very small business, stationery. So she was selling stationeries to some leading institutions. Her husband is also a businessman who is importing certain items, and they both were running their businesses separately. And the wife's business was not a big one, but looked very profitable. And They sent their son to US, who got an MBA and came back. And now the son thinks differently. He wants to improve the business. Mother has been running her stationery business very carefully and very profitably. The son joined and they moved into printing business. Printing business is very competitive. And they purchased a printing house using their reserves. Now they have saved money. The mother has saved money with her stationery business. Now they have a good capital. She has been running the business for 20 odd years. Now they have accumulated a very good capital. And since son wanted to start a business, she gave all that money and he purchased a very good printing location, a printing house. Everything was there. And they started quoting for big companies. One of the biggest orders you get for printing from these big companies is calendars. And many rejected because they have never done a calendar earlier. Now this is how business is taking place. Everyone is evaluating risk. Everyone wants to avoid risk and they undertake only a calculated risk. So when you say, I have all the machines, but I have never done the job earlier, no one wants to give that to you. Now you have a white elephant, nice new machines, the new location, perfectly architecturally designed, but no businesses. Then son wanted to start up another business while the first one is not generating cash, importing vehicles. Now you have imported some luxury vehicles, they are not moving. Then he started tourism. They purchased a land and used the existing lands as well and constructed some guest houses. All of a sudden, 2019, just after 1 year of completion of the construction, the Saharans attack came and tourism fell down. Now they are not making any money out of that. And still they were paying all the due amounts to banks, thanks to father and mother's business. Now he wanted to start up a huge business and they took loans from many banks and many finance companies simultaneously. That is a problem with credit evaluation. We are looking at history, but all of a sudden, if you are a very good paymaster, you are asking a loan from bank A, B, C, D, E equally and simultaneously. So it becomes very difficult to evaluate. And they took a huge loan. For the very first time, they find it difficult to pay any loan. All of a sudden, mother's stationery business got caught with fire for the very first time. Now the insurance company, will they immediately pay them money? No, they will evaluate. They will check what has happened, what has caused fire. And they were asking a lot of questions. Now they were trying to play out with the insurance company to make a claim. That's where the fire insurance comes. The insurance company finally did not pay them. They found the claim is a bogus claim. Fire insurance, sometimes certain business people try to manipulate. You put certain unwanted items and set it on fire. So fire insurance is property insurance that covers damages, losses caused by fire. But it does not mean the insurance company will always pay all your claims without investigating. And most of the time, when they investigate, they will find the reason. Is it done by the owners or was it happening without the owner's intervention? So before honoring any claim, an investigation will be done. So I was connecting credit evaluation plus insurance. If you do proper credit evaluation, you would have avoided taking unnecessary risk. When the business person found it difficult, he set fire the claims. But the insurance company is not honoring all bogus claims. They investigate. Another one, homeowners. Now we are looking at general insurance products. So even for your exam purpose, if they ask what are the types of general insurance products, you must be able to write and describe different general insurance products. Homeowners insurance, also commonly called homeowners insurance, is a type of property insurance that covers a private residence. Okay, so what are the risks that can take place when you own a private residence? It is an insurance policy that combines various personal insurance protection, which can include losses incurring to one's home or loss of other personal possessions of the homeowner, as well as liability insurance for accidents that may happen at the home or at the hands of the homeowner within the policy territory. So homeowners insurance will protect the homeowner from unseen incidents that will damage his house. Travel. Okay, so these days we see a lot of tourists got trapped in different countries for a period than they never even dreamt to stay in one country. The tourists now stay far away from their homeland and still finding it difficult to get back. Now that is during Corona pandemic. There can be many occasions where tourists or the travelers will be trapped somewhere else. There was a time where, due to a volcano smoke, many airports were closed down in Europe. Means what? If you are staying as a tourist, you have to extend your time. A typical travel insurance policy will have coverage for travelers' main concerns. Now these are the main concerns. Trip cancellations, medical emergencies. During a travel, you will come up with the disease, medical emergencies, travel delays, lost luggage. So these are some of the examples. Most policies are built to comprehensive to protect travelers from a variety of events that may cause a financial loss before or during their trip. Now today you can see how important such travel insurance. If everything moves smoothly, I plan to stay in Singapore 1 week, and if I can get back within 1 week without any problem, without losing my luggage, without anything happening, I'm very happy. And most of the time, yes, that's how it happened. But very rarely, there can be incidents that I have to stay there than the expected time, than the planned time. Means what? I have to meet a lot of other expenses than I planned. That happens very rarely, like what we are seeing now. On such, if I have taken traveler's insurance, I am protected from these unforeseen events. Now, if this happens always, then insurance companies will not undertake travel insurance. Remember, this is not happening always. What you see today during this Corona pandemic, tourists are trapped in many different destinations. If that continues to happen, then the insurance companies either have to increase premium or they will not be interested in travel insurance. Since it happens very rarely, insurance companies are very interested in giving travel insurance. So at the very beginning, we said insurance will look into accidental incidents, not catastrophic things, not things that will repeatedly occur. Okay, so from the traveler's point of view, getting into such situations is very rare. If that happened, then I must have some safety, a security. That's where travel insurance matters. A typical travel insurance policy will have coverage for the main concerns of the traveler. Okay, so we send most of the items by shipments, and the ships may get capsized, or ships may be subject to many other natural disasters, or even man-made disasters like the Somalia sea pirates. Means what? The goods which I transfer from one destination to the other will not reach that. And after manufacturing them, after obtaining a job, a sales request, now I'm sending my stuff to another destination. During the transferring by shipment, I may lose them. On such, I need insurance. Marine insurance covers the loss or damage of ships, cargo, terminals, and any transport by which the property is transferred, acquired, or held between the points of origin and the final destination. Okay, so ships get capsized, the cargo get lost, and on such, I want a coverage. And that's where I am interested in paying for the marine insurance. Okay, so far we are discussing different types of insurance coming under general insurance. Okay, now can you remember the question which I asked at the very beginning? I asked, health and surgical, is it a life insurance or general insurance? Yes. So, can you see the slides now? Can you see the slides? Yes. Okay. Now, my question was health and surgical insurance. Is it life or general? At the beginning, you said it's life. Now, you can see the slides and tell me your answer now. Health and surgical, we are discussing different insurance policies coming under general insurance. Health and surgical, is it life or general? Send me your answers. Yes. So at the very beginning, you thought it's life insurance. Life insurance covers life. Health and surgical is a general insurance product. Now I would say People's Insurance PLC is handling only general insurance. People's Insurance PLC is not handling life insurance policies. Can People's Insurance offer health and surgical insurance policies? Okay, why? You said yes, why? Yeah, it's why. My question now is why or how? You said People's Insurance, being a general insurance company, can offer health insurance policies. My question is how? Because health is a general insurance. Since they only handle general insurance, health is a general insurance product, therefore they can offer health insurance. Very good. Medical insurance will provide you coverage only for hospitalization. 3 specific ailments and accidents that two for a pre-specified amount, while health insurance will provide you with comprehensive coverage against hospitalization expenses, pre-hospitalization and post-hospitalization expenses, and ambulance. Okay, so now you can understand health and surgical is not belonging to life, but it's a general insurance product. Okay, so under general insurance product, another one is title insurance. First, we'll look into the slide. Can you see the slide? No. Okay. Right. The title insurance is a form of indemnity insurance that protects lenders and home buyers from financial loss sustained from defects in a title to a property. The most common type of title insurance is lender's title insurance, which the borrower purchased to protect the lender. Okay, so we were discussing about credit evaluation. Under credit evaluation, the last one I refers to security. So it can be insurance. Normally, Campari, the last I is insurance. That means security. Most of the time, your property can be considered as a very valid insurance. Now, properties. If we talk about properties, let me describe a nice writing by Thomas Sowell. Thomas Sowell is a presidential advisor to US President, and he has written a book, Advanced Economics Beyond Stage 2. In this book, he comes up with a very nice example. He says, most of the developing countries, especially the African countries, their residents do not have a clear title. If they have a clear title, the country will develop as people will obtain loans by securitizing their lands. Now think about many farmers in Sri Lanka still engaging in Chena cultivation, hen gobitana. They cultivate in a land which they don't belong. Then there are many Sri Lankans who are living on certain deeds which are not accepted, like Swarna Bhumi Oppu. They are not considered as a very valid title. By these days, the government is issuing certain computerized title known as BIM Savia. And somewhere they have mentioned first class ownership. Means what? the owner of this property has a very clear title. Okay. If you have a property, you can consider as a security. At any given moment, you can give it as a security for the bank. Now I'll tell you some examples of the importance of this title insurance. Whenever you are trying to obtain a loan facility against your property, they are interested, the bank is interested in whether you have a clear title. Means what? Will there be interest by other parties than you for your property? If not, you have a very clear title. Now I'm referring you an example of selling a land, a huge land, for a land sales company. Let's say Prime Lands, they are known as one big land sales company in Sri Lanka. Someone who is owning about 6 acres is trying to sell this land to this finance company. And the finance company will first take your deed, survey plan, and start evaluating. So there is an investigating process to check whether you have clear title. And after obtaining the title from you, can this finance company, being a company interested in lands, can they develop this land and sell out in blocks? So that's their business. And one condition this finance company put is, when you start up negotiations, we'll pay you an advance and we'll put a banner in the premises and saying, we are going to develop and sell this land. Then the owner asked why. Why do you want to put up a banner in this premises after paying me a percentage? So out of the total land value which you agree, you are going to pay me 10%. After paying me 10%, still you are not owning the land, but you are going to put a banner in my property. Then the finance company says, when we put up this banner, all concealed facts will emerge. The people who have other interests, maybe the people who are living abroad who still have claims for this land, even though you come up with a deed, they will, within 1 month, they will come up with their case. Okay, then the landowner finally agreed. Now, the finance company, before developing the land, gave a percentage and put up the banner. And after that, they started investigating. And they found the deed shows a specific amount of acreage plus purchase, but when you sum up in the survey plans, that amount is different. Now that can be due to a calculation error. So that has taken place. And they found before 2004, some of these blocks do not have clear title. And they said, therefore, we have to go for the title insurance. Whenever a property is not showing past records perfectly, whenever you have a suspicion about the title, that shows a reason to get an insurance cover. So whenever you go for the home insurance or the property insurance, they evaluate whether you have the perfect ownership. Now, before 2004, there were certain issues. Therefore, the finance company said, okay, we have to obtain a title insurance, and that amount will be deducted from the agreed value of the property. Title insurance is a form of indemnity insurance that protects lenders and home buyers from financial loss sustained from defects in a title. So if the title is not 100% clear, if there are defects, then I must get an assurance. The most common type of title insurance is lender's title insurance. So title insurance is one form of general insurance that is protecting properties. Okay, so we were discussing about general insurance and we looked into some very popular ones like motor insurance, marine, traveler's insurance. Now we are looking into another one, that is title insurance. Personal accident. This is another form of general insurance product. Personal accident insurance is an agreement between the insurance company and the person insured, where the former will provide financial compensation for the latter or his family in case of permanent disability or death caused directly and only due to an accident. People get hurt, disabled, or even dead by an accident. On such, if you are insured, you will get a claim. You can get a claim. So, personal accident is another form of general insurance that will protect an individual or his family. Professional liability insurance. Now we are talking about general insurance products, and the one we are looking at is professional indemnity. We go to professional people to get an advice. We believe they undertake the risk and calculate what we cannot calculate using their professionalism. For an example, if you are constructing a massive building, you may go to different professionals. First, you may meet an architect. He will develop a plan. Then you may go to a structural engineer who will evaluate the structural stability of the building. When you are constructing, if the building collapses, somebody must take the responsibility. You are a layman. This is why you went for professionals. And upon professionals' advice, you hand over the job to a contractor. Contractor is constructing upon a plan given to him by the architect and the structural engineer. Someone has made a mistake. Now these are the professional mistakes. On such, the person who is advising you can make simple errors, which you would go to courts and charge against professional negligence. Professional liability insurance, also called professional indemnity insurance, commonly known as error and omission, is a form of liability insurance which helps to protect professional advice and service providing individuals and companies from bearing the full cost of defending against a negligence claim made by the client and damages awarded in such a civil lawsuit. So in a civil cases, the insurance company will, yes, even doctors fall into this category, yes. This is professional indemnity. All professional people gives advices to the layman who do not know the subject. It can be a doctor, it can be an engineer, or any other professional person. Upon his advice, we act. And sometimes if we end up with a disaster due to a negligence by the professional calculation, then we go to the courts and file a civil case against the person who gave us advice. Maybe the damage is measured in millions. The general insurance undertake that as an insurable interest. Now, if all the professionals make such negligences, then the insurance companies will not undertake. Means what? There can be very rare occasion of such negligences. If it's your practice, then no one want to help you. Since it can take place very rarely, the insurance companies will undertake this risk. So that is known as professional indemnity, or you can call it errors and omissions and errors. Then you have another one, fidelity guarantee. Fidelity guarantee covers losses sustained by employer as a result of an act of forgery, fraud, or dishonesty by an employee. The loss can be of money or goods for the duration of the policy. The cover may be required in respect of a single employee or a group of employees. When I employ someone, I believe he does his maximum, but there can be occasions due to my employee's negligence, my customer will end up causing a huge damage. There are law cases where we cannot imagine that due to a simple error, what a damage takes place. Maybe an employee, a pharmacist, can read incorrectly and give a wrong medicine. Maybe a worker working in a construction site can do a simple mistake causing huge damage. But the employer should be protected. Therefore, the employer gets a fidelity guarantee. If something happens from my workers, I am protected. My company is protected. So what are these? It can be forgery, fraud, or dishonesty. Forgery, fraud, or dishonesty. So this time it's not negligence, but purposely done. Yet, the employer is not responsible. He has not guided the employees to act in a dishonestly manner, but the employees can make mistakes. There are enough examples, and I'll tell you one simple example. Now, a particular printing company got a massive order to print calendars. Let's say the total value is about 10 million. And before printing, the company was given machine proof. That is the word they use, machine proof. First you check everything on the computer, send it the computer emails, and get everything approved by the client. Okay, so the letters, dates, everything is perfect, holidays are okay, so everything, both parties have agreed. And finally, machine proof is set. And the machine proof means before printing the entire lot, one machine printout is taken and sent to the client. So that shows exact color mix, exact resolution, exact words, everything perfectly. And the client signed. Means what? This is the calendar which I want. I saw the exact calendar, and that must be the calendar delivered to me. Okay, the calendar was delivered. And they found several mistakes that is not in the machine print, is printed on the entire amount of calendars. A very simple mistake, a spelling mistake, and some pages were not properly set. Let's say in the month of January, if 1st of January falls on Monday, Even in the machine print, it falls on the Monday. But when it comes to the real calendar, 1st of January falls on Friday. So that's a massive error. On the very first day, when your customer see the calendar, you find, what is the purpose of this calendar? 10 million. And the company rejected accepting the entire lot of calendars, and the printer lost 10 million. Okay. So these are very simple mistakes. Very simple. Done by an employee who is in the computer department. Very simple mistake. So he was sacked. Before being sacked, he did a simple mistake and got out of the business places. Okay. So your employees can do massive damages to you. So being the employer, you have to get protected. That's where fidelity guarantee comes. Burglary. That's another general insurance product. Read these sentences very carefully. Burglary insurance. Can you see the slides and read it? Burglary insurance is a type of insurance policy that recompenses loss or damage caused to the insured property and valuable items such as jewelry, cash, stock of goods, furniture, etc. And burglary means a forceful entry by an intruder into the insured premises. Okay. Read this very carefully. A forceful entry by an intruder into the insured premises. Now, once an insurance broker went to a company to sell general insurance products, then the company owner said, I want to insure my stores. Lot of theft is taking place in the stores, and I want burglary cover. The insurance broker is a very honest salesperson. He said, look here, burglary covers this. A forceful entry by an intruder into the insured premises. Then the owner said, what do you mean by forceful entry? Then the insurance agent said, someone break a window and get into your stores and steal your stuff and get out. That's a forceful entry. Then the owner said, no, such incidents do not take place, but I want the burglary cover. Then the salesperson, again, being a very honest guy, showed a forceful entry by an intruder, unknown party, into your stores and get away. Then the employer says, never ever an unknown party has got into my stores and stolen anything. Then the salesperson asks, what do you mean? You said there are a lot of stealing take place in your premises and you want burglary cover, and no one has ever broken windows and got into your premises and moved out. No outsider has ever seen on your CCTVs. And what is happening? Then he said, I suspect the employees themselves take out items from my stores. Okay. Now what is your answer? Is burglary the answer on such? The burglary only cover an outsider getting into your business. Yes. An outsider getting into your business and forcibly taking out. That is not taking place. So burglary is not the answer. Yes, you are correct. So you can get fidelity, not burglary. So you must know the differences between different general insurance products. Another one, cash in transit, is specifically designed to protect the insured from loss of money arising out of any cause, loss or damage of safe, strong room, any case in which money is being carried, the goods or property of the insured or for which the insured is legally responsible caused by theft or attempted theft. Okay, so we have seen on many occasions cash in transit and cash in safe is being taken out forcibly. The very recent example is something that happened in the general hospital. Someone showing a toy pistol trying to take away money from the cashier. Okay, so that is covered by insurance, cash in safe, cash in transit. So whenever you handle a large amount of money and whenever you are transferring that, you are undertaking a risk. Whenever that is in your safe, you are undertaking a risk. And you have seen last week a nice example from Sri Lanka. Throughout the world, we have seen there are many movies based on such stories. Films like My Secret Cashier or many other movies based on bank robberies shows this risk, cash in safe and cash in transit. Whenever you keep cash, large amount in a safe, you are undertaking a risk. Whenever you are transferring cash from one location to another physically, you are undertaking a risk. Therefore, the insurance company will undertake that risk. That is known as cash in transit and cash in safe. Similarly, goods in transit. Not only cash, let's say cigarettes. Whenever cigarettes are transferred, there are many cases that they are forcibly taken. So goods in transit are also insured. Goods in transit insurance covers items from theft, loss or damage while they are being transported by vehicle from one place to another in the course of business. Some van or courier insurance policies do include an element of goods in transit cover, but only up to a certain value. Now you can see different types of risks that the general insurance policies cover. And the things which you mentioned last, cash in transit, goods in transit, there is a possibility there are others to get damaged, to get a claim. And insurance companies put different conditions for that. So if you are carrying cash, how you should do it, how you are not allowed to carry cash without taking them in a vehicle. They are being transported by vehicle. Cash in transit, they may even name and categorize the type of vehicles. Are you going to carry 6 million in a three-wheeler or a motorbike and only one person involved? So likewise, these are covered and sometimes put as conditions in insurance policy. Product liability. Product liability insurance is designed to indemnify the manufacturer or supplier of the defective product against losses resulting in bodily injury or property damage arising from the use of defective product. Manufacturers always prefer to follow the specific standard specifications and manufacture a very good product for customers. But there can be defective products, and the customers may get damaged because of these defective products. So the product liability insurance will protect you from that. So we have seen from time to time, even car manufacturers, well-known car manufacturers like Toyota, recall some of their defective products. Fellow manufacturer, you want to see that you are protected from these defective products that are not planned by you. So the probability is very rare, but you need a protection. So you get product liability. Public liability. Public liability insurance is insurance that covers the cost of claims made by members of the public that happen in connection with your business activities. It covers cost for personal injuries, loss or damage to property, and death. Business coverage is for incidents on your business property at events or activities your company organizes. Now, public liability. If you think about product liability, that will protect the user or the direct customer of you from your direct customer. But sometimes, because of some mistakes of your own, general public can get affected. Now I'll tell some nice example. There's a building owned by a well-known, well-reputed company, and it is facing seashore. The building is 14-story, a 14-story building. On top of the building, they have put up a very big name board. Due to sea breeze, the nails have got corroded without notice of anyone. One day, this huge name board fell down from 14 stories and fell upon a passenger, someone who was walking by. And that person died out of this accident. Okay. So that person who died out of this accident is not a customer. He is someone, a member of the general public, moving around this building. Okay. Now these things very rarely can take place. Public liability. Anyone who comes to your premises should be protected. So the general public is protected. That is known as public liability. So many businesses with massive buildings, there's a possibility something fall down from top. And no one knows at what time and how. Then that's not always happening, very rare. But if it happens, the damage may be massive. So you should be covered by public liability. Bankers' indemnity. Now, banks undertake a very risky business. This insurance provides comprehensive insurance coverage from one single insurance policy to the institutions, which have heavy financial transactions like bank. The risks covered under this insurance are cash, valuables in the premises, cash or valuables in transit, forgery, alteration, infidel activities of staff, etc. Okay, so at banks, there can be many reasons that will create risk for the bank. Maybe the employees forge. Employees do certain activities with bad intentions and causing damage to someone. Let's say in Sri Lanka, in certain areas, the initials and the surnames are almost similar. In one case, let's say RMIU Ratnayaka. The initials are RMIU Ratnayaka. So in that area, there are many Ratnayakas. And in one bank, in one place, there were 5 different current accounts owned by different RMIUs Ratnayakas. So when a check comes, RMIU Ratnayaka, to whose account you are going to deposit? And suppose there is one very wealthy RMIU Ratnayaka who is not worried about much of his cash inflows. And there is one RMIU Ratnayaka who is no more living in Sri Lanka but has not cancelled the account before leaving Sri Lanka. Okay. What can the staff member do if he get across such a situation? And if he has been misusing that, one day if it exposed, the bank is at a problem. So bank insurance covers such activities, infidel activities of the staff. Okay, now we have been talking a lot about different types of products offered by general insurance. Now, one reason where many people cite for not obtaining insurance is they say it's very difficult to get a claim. But before honoring a claim, the insurance company will do an independent investigation. And sometimes you will find these claims are not genuine. On such, they do not honor the claims. There are many occasions such claims are artificially created. Okay, let me ask you some different incidents and tell me the matching insurance product. You are a dentist and you want a coverage. Okay, you are a dentist and you want a coverage to protect your dentist chair. What is the product you are looking at? You are a dentist. Your job is a dentist. And you have purchased a dentist chair. You have seen this inclined, nice long chair with some other instruments attached. Let's say that's a very expensive one, 2 million one. You want to protect it, okay, including the premises, your name board, your displays, and especially you want to protect them from fire. What is the insurance you are looking at? Can someone send me a message? You want to protect your items from fire. What is the insurance product here? Okay, so you get fire insurance. The same dentist is worried if one day one of my advice goes wrong, and if the customer makes a massive claim, what can I do? What is the insurance policy that I must undertake? Fidelity guarantee. Very good. Professional indemnity. Same. Right. I have put up a name board, attached lighting for that. So during night time that will be illuminated. And I suspect due to rainy day there may be firing or the fire burning out, and unknown to me, the customers do not come at night, unknown to me, someone will get damaged from this name board. Maybe it will fall down or it may get caught to fire. I want to protect not the customers but anyone who is passing by. What is the product I am looking at? Public liability. Very good. Then I recruit nurses, and before I attend, I make the nurses do the injection and do other preparation work. And she can make mistakes, and I'm liable for that. What I'm looking at? Okay, good. Right. Now we have an understanding about different general insurance products. Very good. For exam purpose, remember you can be asked these questions. What are the two types of insurance products? You know the answer, life, general. What are the types of general insurance products? Then you must be able to describe them. Then likewise, what I asked, if you are given different occasions and asked what matches, now you must be able to name the insurance policy. Reinsurance. Now, why do we get insurance? Yes, send me answer. Why do we want to get an insurance? Why do we want to get an insurance cover? Tell me an answer quickly. To protect against risk. Very good. Now, the question is, who is protecting the insurance company? Now, insurance company undertake risk of others. That itself is a risk. Okay. Now, who is insuring the insurance company? For that, we have reinsurers. Reinsurance is the practice whereby insurers transfer portion of their risk portfolios to other parties by some form of agreement to reduce the likelihood of paying a large obligation resulting from an insurance claim. The party that diversifies its insurance portfolio is known as the ceding party. Okay. Now, when we were children, we had a very nice question. If you do bad things, you go to hell. So when you go to the hell, there are people who will punish you, torture you. So our question is, if we are tortured in the hell, that itself is a sin, and the person who torture us must go to another hell. Okay. Similarly, an insurance company protects someone else. That protection itself is a risky business. If so, that insurance company should also be insured. That's where reinsurance comes. So what is reinsurance? In simple terms, reinsurance is insurance for the insurance company. So it's like this, a small umbrella to protect us from rain. But means what? That umbrella will get wet. So we are putting another umbrella on top of that, covering the small umbrella. That will get wet. So we put another umbrella. Okay, so the insurance is insuring the insurer. Reinsurance is insuring the insurer. It is a mean by which an insurance company can protect itself from risks. Yes, the umbrella is trying to protect itself from getting wet. The company who requests for cover is called cedent, and the reinsurer is called ceded. So the cedent party and ceded party. Just remember these terms. Okay, read it once again. In simple terms, reinsurance is insurance for insurance companies. So, for exam purpose, if you asked what is reinsurance, your answer is insurer getting insured. Now, bancassurance is another term. You can see the chart, a nice diagram. There is a bank, there is an insurance company. The intersect of that is called bancassurance. That is to sell products like life insurance and other insurance products to a bank's client. Okay. Do you know what is hermit crab? Hermit crab. Yeah. Okay. Then Dilshani, can you describe me what is hermit crab? In Sri Lanka, near lagoons, you will find animal known as Varatia, an animal living within the shelf of another dead animal. Okay, so it's a combination. You are getting the benefit. Both parties are getting benefit. Okay, bank assurance. Bank is getting benefit by having an insurance agent in your premises. Okay, so by now you will understand most of the products which insurance companies sell are very important for banks. Even in banks credit evaluation, the last I, Campari, refers to insurance, that is protection. So most of the banks, whenever they are lending, they want to get a guarantee that they are protected. When you are offering a housing loan, you prefer to have title insured. Okay. Whenever you are granting a leasing facility, you prefer, or by even its mandate legally, to get a vehicle insurance cover. Means what? Whenever you are giving a loan, you prefer it is insured. The asset is insured. Means what? If an insurance company agent can sit in your premises, he get a very good number of businesses. In addition to that, the bank also benefits out of this insurance. So if there's a collaboration between the bank and insurance, remember banks are governed by central banks, insurance companies are governed by another institute, another regulator. They are two different companies, but like hermit crab, if both get together, there is advantage. Bank can easily protect its assets, where insurance company can easily obtain insurance policies without much marketing efforts. So that is known as bank assurance. So bank is different, insurance is different, but the moment they connect, they can do very profitable business. Bank assurance is a relationship between bank and an insurance company that is aimed at offering insurance products or insurance benefit to the bank's customers. In this partnership, bank staff and tellers become the point of sale and point of contact for the customer. Okay, so bank assurance is in simple, it's a collaboration between bank and the insurance company where both parties get benefits. In your past papers, there is a very nice question. Deposit insurance is a moral hazard. Comment. A question like that. Okay, so moral hazard. What is moral hazard? Moral hazard arises when someone who is protected from loss fails to take measures to avoid excessive risk. Okay, read it very carefully. When someone is protected from loss, fails to take measures to avoid excessive risk. Okay, let me tell you some nice examples. Once a particular finance company's a branch, gold branch, was robbed at gunpoint. So the robbers have entered the branch and they shot the pistols and guns, got the cashier to give them handover money, and they went out. And after 1 week, okay, now the entire amount was settled by the insurance company without much questions. They have got the relevant insurance covers. After 1 week, another branch of the same insurance company at Nigambu was robbed at gunpoint. This time when the finance company went to the insurance, the insurer asked a set of questions like, who is having the key? Who is handling this? What are the protective measures taken? Do you have CCTVs? Do you have a bell where you can immediately ring to the police station? What are the security measures taken to protect the cashier? 101 questions were asked. And the finance company knew if another similar thing happened, it will be extremely difficult to get the claim. And next year, the cash in transit and cash in safe premiums will be very expensive. So they got the service of the existing security guards were given firearms. Now they got the service of firearmed securities. And after 1 month, the police had captured the gang who robbed these two. Now the gang has robbed many other banks and finance companies, including this. And the police has captured the entire gang. Meanwhile, a security guard has misfired. No one has got damaged, but the bullet has hit the wall. And the finance company asked the security company to remove the firearms. The insurance agent, on friendly talk, asked from the finance company's stock, have you removed firearms? Then the finance company's stock said, yes, we removed firearms from our security guards. Why? Because the gang that have robbed have been captured by the police. Then, on a friendly note, the insurance agent said, if you believe that is the only gang that can rob in Sri Lanka, your decision is valid. Got it? Means what? You have to protect your property as if they are not insured. But the moment you undertake an insurance cover, you believe, I am covered. Now I can undertake an excessive risk. Okay, now let's look at this chart. Risk taking by banks. Excess risk taking leads to bank losses. Therefore, government comes and bail out. Okay, we'll talk about this, what is bailout, how it happened, 2008, economic recessions in USA, okay, how certain banks collapsed and how certain banks were protected. We'll talk that. But the chart shows you one thing. The moment you are protected, you will encourage to undertake more risks. In your free time, just Google and check a guy called Hannibal Gaddafi. There was a son of Muhammad Gaddafi, the Libyan leader known as Hannibal Gaddafi. Hannibal Gaddafi once went to Switzerland, okay, and he drove a car about 30 kilometers in the wrong direction. So that was one-way traffic. And he got a racing car and raced from the other side. And he was arrested. Okay, you surf and check what happened to him. Hannibal Gaddafi. Switzerland police finally removed all charges against him because his father is such a powerful political person in the world. Even in Sri Lanka, you have seen that sons do bad things and the fathers protect them, and sons do more bad things. When you are protected within your country, you prefer to go outside and check it, and still you are protected. And you undertake more and more risks. Okay. So this is the nature of human beings. The moment you are protected, you undertake next slab of risk. The same applies to insurance as well. Moral hazard. If you insure your car against a theft, there is no reason to lock the car. I don't care. If I don't have that insurance cover, I lock it and I look at it always. But since I'm covered by insurance, I don't lock the car. If my salary is fixed and if I'm not fired out, if my company can cannot fire me out, then why should I work hard? A moral hazard. Okay. The company believe it's better to protect an employee by fixing his salary and ensuring his job safety. So the employee would work harder and harder. But the moral hazard is different. You expect something, but it's reverse happen. If you get sufficiently high unemployment compensation for the indefinite future, there is no reason to look for a job. During pandemic, 5,000 rupees were given to Sri Lankans. A greater majority got that 5,000. And one member from the opposition said, if I was in power, I should have given 35,000. My dear, for the greater number of Sri Lankans, if they get that amount, why do they do a job? Okay. So you may have a very good intention, but it will backfire. That's moral hazards. Moral hazard refers to a phenomenon of a person's behavior being affected by his or her insurance coverage. Moral hazard is known to exist in all types of insurance markets. Whatever insurance you undertake, you believe I am protected. If I am protected, why should I protect myself? There is someone to protect me. If I undertake very high risk, people may be more careless without property, with property that is insured. Okay, I don't want to lock my doors. I don't want CCTVs. I don't want all these protective measures because it's protected. The main way that moral hazard comes into play into the health insurance market is through an increase in demand for health care service utilized. Yeah, people undertake more X-ray examinations than required. Even without any reason, they get many checkups because they are covered by the medical facility. Now we have SLDIC that we will discuss in length next week. Deposit Insurance Scheme, Sri Lanka, SL, Sri Lanka Deposit Insurance Scheme. Okay. Now, deposit insurance. Last week, recently you looked into the finance case. The depositors are insured maximum up to 600,000 rupees. Okay. Now, depositors are insured against the collapse of their institute where they deposit. Is it good or bad? Okay. So I'll give you a question. Deposit insurance is a moral hazard. Okay. Should we give a deposit insurance cover for depositors? Is it good? Is it bad? Okay. There's a very nice book written by Ben Bernanke, the former chairman of Federal Reserves. In US, they don't call central bank, they call it the same institute, Federal Reserves. Ben Bernanke wrote a nice book about how he bailed out entire US economy and almost the world economy during 2008 economic recession. And he gives a very nice metaphor there, a mental picture. He says, if someone used to smoke, and if I advise him again and again to not to smoke, but if he continues to smoke, he must face the effects, side effects. He must face the repercussions. In addition to that, this chain smoker goes to bed while having a cigarette in his fingers. Mind you, he's sleeping on a rubber mattress. One day, you wake up to see that your neighbor who is not responding to your advice is suffering from fire. His bedroom has got caught to fire. Now I'm asking a question. Now I got awake and I see my neighbor who is not listening to my advice. now is caught up with fire. Should I protect him? Tell me yes or no. I have advised him again and again not to smoke, but he neglected my advice and he went to bed while having a cigarette in his hand, and he's sleeping on a rubber mattress. And at midnight, I wake up to see fire is coming out of his bedroom. Should I go and protect him? Should I go out and save him or not? Tell me your answer, yes or no. Others tell me, should I save him or not? Why should I save him? Make your comment. Why should I save him? Now you said I have to save him. Why should I save him? Write something. Why should I? Humanity. Humanity. Okay. Thanks to that humanity, more and more people will smoke. Okay. Right. Good. Anyway, Ben Bernanke says one thing. I have to save him because he is living in a wooden house. He is living in a wooden house, and the entire city is made out of wooden houses. Means what? I save him because if I don't douse that fire out, his entire house will get burnt down, and that will capture to the next and next and next, and it will spread out. Means what? One finance company fails. Their depositors are like the smoker subject to fire. From time to time, the credit rating companies would give the credit rating to the finance company. Before collapse, definitely the credit rating will be degraded and degraded. We do not look into that, like the advice is given not to smoke. We only look at the higher interest given by this finance company and get into depositing into it. But when the finance company collapses, when the fire breaks out from that room, should we go and protect him? We protect him, my dear, in this case, not because of humanity, but because of risk spreading out. In banking business, if one fails, it will adversely affect to others. We call it dominoes effect. One after the other finance companies will collapse. When the depositors find their hard-earned money goes out because they deposited in a finance company, they do not trust any other finance company, and they want to withdraw money from all the other finance companies. So this is why deposit insurance comes. Now the finance companies understand, the depositors of finance companies understand, I am protected maximum up to 600,000. Okay. So if I have deposited 300,000, my entire 300,000 will be given. If I have deposited 650,000, still I will be given only 600,000. That will give an assurance to the depositors of the finance system. Yes, we are protected. When we get that feeling, number one, we are not afraid to deposit in the finance system. So the system stability is ensured. We'll look into these nice words slowly. Today we talked about insurance. At the beginning, I just came up with a credit evaluation mechanism. Then we directly went into insurance. In insurance, you are often asked these questions. What are the types of insurance? Now you can answer that. Then what are the factors you should be considered when giving life insurance policy? Now you can answer that. What are the types of general insurance products? Now you can answer that. You can match different requirements with different insurance products. Then we talked about bank assurance, reinsurance. So the very common questions are, what is the difference between bank assurance and reinsurance? Later on, we may look into these direct questions and look at how we answer the directly. But for the time being, now you know what is reinsurance. Insurer getting insured is reinsurance. Bank assurance, a collaboration between bank and insurance company, which is beneficial for both parties. Then we talked about moral hazard of insurance. Okay, one last question. If you think moral hazard takes place because of insurance, tell me an example. How do you prevent that? Insurance companies prefer to prevent moral hazard of insurance. Tell me one example. No claim bonuses. I am insured, but if I act as I am not insured, and if I don't make the claim within the year, I will be given deductions next year. No claim bonuses. Okay. Next week, we will look into principles of insurance and more areas of insurance. After that, we will move into stock market. With that, I'll end today's session. Thank you.